following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from optionpit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Grigas from Options Express.
Welcome back to the Options Block. After a nice long weekend, it's nice to be back in the old Option Block discussing the news and the topics that are interesting in the world of options. And we have the usual gang of suspects joining us today, starting off, as usual, with Dr. T and his woman, Mr. Tusaw. How are you doing today?
Doing well.
Did you have a chance to check out that film over the weekend?
I did not. I'm going to have to get into that and just see what it's all about, but I did not get a chance to see it.
Well, it's old hat for you. I know it's probably based on your life story. A gynecologist who is beloved by women everywhere. That just sounds like you.
Yeah. Absolutely.
Who also happens to bear a striking resemblance to Richard Gere. Also, sounds just like
I'm just glad Brian's song doesn't get closer to Mike. So I'm just happy for that.
Hey, bringing up Brian's song brings tears to my eyes. That was that. If you watch that movie and you don't have tears in your eyes, you're not.
Oh yeah, no, you're heartless.
And listeners can probably guess that other voice chiming in there is good old Mr. Greasy Meatball McRib himself, Mark Sebastian. How you doing today, Mark?
I love that every week I'm adding new horrible foods to my nickname. What's next? It's going to be Greasy Meatball McRib Ice Cream Sundae Frosty Sebastian. Is that what we're going for?
KFC Double Down or something like that.
Oh, nice. Double Down. I love that. So
we'll get you a spam burger in there soon enough.
Yeah, deep fried me. That's if they were a movie about my life, it'd be the deep fried life.
And then in the rotating Options Express seat today, we have none other than Tim Navabi. Tim, how are you today?
I'm doing pretty good, thank you.
T-Nav in the hizzy.
I'm going to say, he has his own nickname now, T-Nav.
Yep, T-Nav.
All of our listeners. So all the ladies who are dialing in, ask for T-Nav at Options Express when you call up, and you're all set.
And ladies, he is single.
Yes.
Oh, there we go.
Oh.
A tidbit I did not know.
Option Block's most eligible bachelor, Tim Navabi.
We'll have to put a little listing for you up in the show notes.
Yeah, well, we could have a dating show called The Trading Game.
Win a date with T-Nav.
Yeah. No, maybe that could be next. That could be the next Option Express contest. Is they have a contest where you can win like $250 free commissions or a date with Tim Navabi. I know I would be trading aggressively for that one.
Who would take the commissions in that kind of contest? There's
nobody. No
chance.
Nobody. Here's what I would say is I would not be allowing my wife to be playing that contest. That's for sure.
We can go a lot of places with that one, but I think instead we'll go right into the trading block.
The trading block.
And welcome to the trading block. It is another, I guess you can call it choppy day today. We were up, we were down a little bit. Nothing too dramatic. We closed the day S&P almost exactly unched up 0.06. I love that. The Dow up 1824, so almost unched itself. NASDAQ took a bit of a hit today, down 12 points, 12.63 today, but on 0.5%. and the VIX pretty much unched down the day. So it was an interesting, if choppy, day today. And a lot of things making waves today, nothing too dramatic in and of themselves. Talked a little bit about politics last time. We won't go too far down the political rabbit hole this time, but there was some waves being made by the healthcare reform getting kicked out in Virginia, being found unconstitutional, and so that obviously would have some impact on some of the drug and insurance stocks, and just shows this thing is going to drag on for quite a long time. The one thing I did like about this was the quote from the judge. He said, "An individual's personal decision to purchase or decline purchase of health insurance from a private provider is beyond the historical reach of the U.S. Constitution. So no constitutional authority exists to mandate the purchase of health insurance." So that pretty much, in and of itself, undermines the entire, existence of healthcare reform.
Well, I think the key word there is private, right? If, it's forcing somebody to buy, although you wonder about that because it's constitutionally mandated to make you buy auto insurance, isn't it?
It might be on the state level. I'm not sure if that's...
Oh, yeah, no, you're right. It's not a national law. I think it is a state law. You're right. But the issue there, though, is kind of the, all the stuff with, the fact that you're forcing people to buy into what is essentially a monopoly, I think, is the interesting thing. Because the health insurers have basically state-by-state monopolies. And I think that maybe that's the issue. I don't know. For me, that's the issue. I'll tell you that much is if we had a national market, then I have no problem with the national law. Since I'm basically, if I'm forced to buy insurance in Illinois, then I'm forced to probably buy Blue Cross Blue Shield. Then, it's kind of like forcing you into monopoly. And that hasn't worked out very well. I mean, take a look at your gas rates and tell me how well that's worked out for you.
Yeah, most of us here are also small business owners and operators, and so that kind of mandating of health insurance definitely tends to hit the wallets of small businesses the hardest.
Mm-hmm. Well, if you mandate health care and break up the monopoly at the same time, I think everybody saves money. But mandating health care without breaking up the health monopolies is ridiculous. That's like can you imagine if they had mandated auto insurance, but the only company you could buy from in Illinois was State Farm? What would the rates be?
Sounds like cable or many of the other government-mandated monopolies we have lying around.
Exactly, and that's the issue. That is 100% the issue, is that the auto insurance they had all these warnings when auto companies went national. That, it's going to ruin this, it's going to drive up that. All it's done is drive competition and save the consumer hundreds, if not thousands of dollars a year on their auto insurance.
And then also some of the other news we saw today was that foreclosures are up. Perhaps not a surprising development, but the number of U.S. homes worth less than the debt owed on them did drop, so that sounds initially bullish when you hear that, but that's because foreclosures took off again rather than an increase in property values. The good news of that is that less homes are underwater. The bad news is that it wasn't because property prices are going up, because people are getting kicked out of their houses.
Well, you know what? But this is what's needed to be done. It is.
Amen.
I mean, yes. I sound harsh, but kicking people out, getting rid of the excess, is going to get us to where we need to go. And I am so happy, and it sounds awful, but I'm really pleased that we've got this process moving along. It's going to get us to where we need to go much faster. It's going to hurt along the way, but things that are good for us sometimes hurt. Nobody likes cod liver oil, but you know what? 30 years later, after your grandmother was drinking it every day, we found out that fish oil is the best thing for your heart, and you're wondering why she lived till she was 164. Well, she was eating that cod liver oil that never really tasted like cherry, if you ask me. But they said, it's cherry flavored, but it always still tasted horrible. But you know what? It's good for us, and in 100 years, you know what? This will end up being good for us. We just need to get rid of, if we can get the new construction under control, which it sounds like we're getting there. We could possibly be out of this thing in a couple of years. It'd be great. we are going to, just from the populace, grow our way into the housing prices increasing eventually. So there you have it.
Well, and I think it's like markets need corrections, just like the stock market needs a correction if you want a long-term bull market. What makes the real estate market so special that it doesn't need a correction? It's one where you look at it, and the problem wasn't so much that the market was getting too hot. The problem was that the market was getting hot, but everyone was buying on it in the equivalent of the stock market, buying on 95% leverage with all the loans that were out there. So with this, when the Great Depression happened for the U.S. stock market, with the Securities Acts of the early 30s, they banned buying on 25-to-1 margin, so to speak. Now, granted, they've brought it back in some ways with portfolio margin, but that's another story. But my point is that in the housing market, the fact that everyone would just leverage themselves to high heaven when they had no business doing it, if you don't plan for a market pullback of some sort and the whole country does it, things like this happen. And so, the next time around, hopefully there'll be not necessarily tighter lending laws, but just more legitimate lending laws to where the signature loan or things like that won't be such an issue anymore.
And Mr. T, I could see that your metals are moving up a little bit today. It looks like ahead of some of the meetings over in the Eurozone. So why don't you and Tim give us your commodity rundown for today?
Well, it's gold and silver. I think that looking at silver, I think that 30 is going to be a tough nut for silver to crack. And that, it is up today. And it's up pretty significant today, even for silver. We're up over 3% and looking at SLV on the day. But 30 is definitely, it's going to be a pretty tough mental barrier, so to speak, to break through. And I think it over time, I think it will. But in the near term, I do see us kind of plateauing a little bit with silver. Gold's starting to come back a little bit. Just in looking at GLD, it's kind of in a similar spot, not quite as harsh not quite as much of a barrier with the 140 level, I don't think, as silver has the 30 level, but nonetheless, we're coming up a little bit today, and like anything, I always tell people if you're going to invest in gold or silver without a hedge, I think that the pairing trade needs to be a bottle of Maalox, folks.
Are you back into your collar positions yet on both of those?
Still in the collar position on gold. Gold's been kind of boring the last month, and that we're in the 130, 140 collar on GLD, and we're just going to see where the end of the week takes us. So before we reset this, there's a chance that for January or February we might end up getting in at the same strike prices, and then SLV we're not in our preferred position, but we're short puts right now at the 25 level on SLV, but we have every intention of, as soon as our fingers on the trigger, so to speak, as soon as silver starts to pull back, we will hedge that in one way, shape, or form.
I've actually made a small change here, and I thought what I would discuss here real quick would be trading weather. How do you trade weather? Well, there's a good opportunity right now in orange juice and natural gas. Orange juice, for example, it's the highest since May 2007, basically on a Florida freeze. Settled at $1.66 a pound. It hit the limit at $1.70 earlier today. The commodity's up about 29% this year. We are looking over the next few days for some colder weather in Florida. If it gets down to about 26, that's sort of the area that, is very damaging to the crop, and it may be there just for a couple hours, but still enough that, it's gotten people, excited about this, not necessarily, excited in a good way. Already, Florida will produce about 143 million boxes of orange juice in the harvest that began in October, and that runs through July. That was down from an October estimate of 146 million boxes. Last year, the output dropped to 133 million boxes. That was the second smallest crop in 2 decades. And that was also after a January freeze. So That's the one weather market, and the other one is the natural gas. Natural gas here, there was a draw in last week's report. It just appears to be, technically it appears to be having a nice rounded bottom here. So, I mean, we, kind of keep your eye.
Rounded bottoms tend to have a lot of natural gas. Oh, sorry, folks.
That's okay. So, we have some draws on the supplies. We have some colder weather. And we had on the commitment of traders report, there were some large non-commercial traders basically starting to cover some of their short positions. So this is all bullish for natural gas. Those are my two commodity markets that I saw with some action today.
FCOJ, turn those machines back on. I could never trade that without saying that at least once a day.
Turn those machines.
Mortimer!
Yeah, a classic film. A classic film in many ways. Of course, it's no Quicksilver where Kevin Bacon walks onto the floor of the Pecos with a visitor's badge and dives into earnings day and starts trading. That's one of my favorite scenes of all time. You don't mind if I walk in here and just with a little handwritten thing on my shirt and just start trading, right?
Orange juice is a nice contract. I mean, it's, most people I see that trade it and make money off it, they do it during, this time with this type of news. If there's not too much fundamental news, or even something real apparent on the charts, technically, that is difficult to trade, I will say. But, if you want to trade weather, if you want to sort of step in here and, go long, these are some good reasons.
All right, guys, thanks for that. I think with that, we will close out the old trading block, and we will roll right into the odd block.
The odd block.
And welcome to the Odd Block. This is the section of the show where we discuss some of the interesting and or unusual options activity that's lighting up the tape today. And we have some interesting ones that in many ways personify the term unusual activity. We're going to start it off with a little one, Radian Group, RDN. They closed $8 and a penny, up a nickel today, so pretty much unched on the day. This is a name that does an average daily volume of about 4,000 contracts, and today they did about 16,000. So they did 4 times their average daily volume today. And this is a Philadelphia financial guarantee insurance company, and we saw in a name that does not that much volume at all, we saw just an explosion of interest in the Jan 9 calls. We saw 14,000 of these things go up today. Yeah, the close of the day was 14,087 volume on this strike, with bulk of them being bought at 40 cents. An immediate, as soon as the bell rang today, immediate explosion of buying activity in these Jan 9s. And the interesting thing about it is, in addition to the fact that it's such a huge amount of volume, I mean, this strike only had an open interest of 3,200, so this is a lot of people tacking on here. The stock's got to rally 15% by January for these guys to pay off. But what's interesting about this, I'm not sure if any of you guys were watching this today that much, but there really doesn't seem to be any news that's driving this one. It's just maybe a newsletter came out again and picked this. I don't know what exactly spurred this explosion of interest in these Jan 9s, but sizable buying activity in these RDN. A very interesting one to watch, and I think one we'll have to keep an eye on for future sessions, because right now there's nothing to account for this explosion of interest except for perhaps a surge of bulls coming into RDN.
This thing was trading less than, about, it was up until May, this thing was trading like $15. This thing gaps up huge. This thing has massive gap ups. The last 2 gaps have been, it jumped from 361 to 7. Then it jumped from, in a matter of a couple days, it jumped from 8 to 12, then back down to 4.5, up to 9, down to 7. In, I'm going to call that 6 weeks, it went from $7 to 18.5, and then in 3 days it dropped down to 9. So this is a stock that when it moves, it's moving. Okay? When it's not moving, it ain't moving at all.
Sounds like someone smells another explosion to the upside in this one.
Yeah. I think that there's going to be somebody is betting pretty cheaply that this thing could be trading $12, $13, $14 within the next few weeks. You know, for what, 35 cents? Not a terrible bet if you think you're right.
Yeah, it's a fairly cheap bet. I mean, once we saw this volume starting going up on the tape this morning, we actually started looking at these ourselves. Like, what
could just be a swing trade, basically.
I mean, if there's a name to do it in, RDN certainly seems like a capable player. They've been a bit range bound over the past, 6 months, but before that, you're right.
Yeah, and even then, it's jumped to 10 and then bet down to 7.5 and up to 10 a couple of times. So.
Might be another good name for the street column.
Yeah, it certainly could be.
And, you can do some verticals here, too. You can do that 7.5, 9 call spread for pretty much value. You can do it for 60 cents. And
that's not a bad price if you can do that.
I was watching that one. I was like, well, you can pretty much, it's almost a no-brainer. You can get in for pretty much fair value and then just roll with it. So if you're not expecting an enormous explosion, you can do that.
One of the things is if you see a huge volume surge on one strike, that is almost always the strike you want to sell. But you want to go with its direction most of the time, but you want to take advantage of its volatility.
I love these kind of names because here's the Jan 9s, 14,087 volume today. The Jan 7.5s did 12 contracts today.
Yeah.
This is one of these great names where there's nothing going on except there's one strike where everyone's coming to play.
Yep.
This is one we're going to keep on the radar for the next few sessions, and we'll just see what's going on and see what happens.
We'll keep Radian on the radar. I like that.
Oh, there we go.
The Radianar, call it.
All right, no pun intended, I assure you, listeners. That was pure Sebastian Gold.
Oh, yeah, thank you.
And then we're moving on to Corning Glass there, GLW. They closed $19.30, up 47 cents today. And they saw some interesting calls today. This one not as unexpected because they had a pretty glowing report about them. And Barron's over the weekend said that Corning could gap up to about $25 over the next few months. A bunch of new products coming out, such as this Gorilla Glass that everyone's putting on all their smartphones these days. So we saw options traders diving into the Feb 20s, picking up about 14,000 on this strike for about 75 cents. Let me just see what the final volume numbers were on that strike. About almost 15,000 went up total today. So a lot of bulls coming in and gobbling up the Feb 20s. They obviously feeling the love along with Barron's for Corning in the early part of 2011. And so this is obviously, you got about 6% for these things to gap up, but they got 10 weeks to do it, so not exactly an outlandish bet. So if you're looking for a near upside play, especially with CES coming up, all these new handsets being announced, might be a good time to get into one of the materials manufacturers for those phones like Corning. Not as unusual as the Radeon one, but interesting nonetheless. A lot of bulls coming in. Any of you guys play at all in Corning, Mike or Mark?
We do. We've actually had we've done a couple things with Corning when it was a little bit lower. We were selling some puts on it. Fundamentally speaking, I like the company. I think they do a lot of good things. One thing that I'm looking at right now, it's kind of like I have a similar feeling with Cisco in that I'd like to see it go above the 20 mark if we're going to get into it in some way, shape, or form in terms of selling puts or doing some type of a combo or something along those lines. So this is one where the way with which we don't have any clients that are currently in Corning, but in the past, what we've done is just sold puts on it and left it unhedged and kind of with the expectation of getting put into it and then working a hedge of some sort along those lines, but just it never happened. But right now, at these higher levels, I'd like to see it go above 20 before we would consider getting into it again, though.
Yeah, it looks like it was down in the 15, 16 range back in August. This is not a name that I follow particularly, but after seeing these calls lighten up the tape, I've been kind of paying attention to it a little bit more. I think it is an interesting play ahead of, if you're going to play the electronics manufacturers, January is not a bad time. Unlike most other names, when January is kind of a dead time of year, and the tech scene, January is actually kind of busy. And then, of course, we're going to finish up with another little unusual one, CFN, Care Fusion Corp. And they closed $24.19, so exactly unchanged on the day. And this is a little one. They do medical technology, essentially, so the medical technology manufacturer. They do an average daily volume of 486 contracts. They did over 7,000 today. And so another one of these little ones just lighten up the tape. These are the kind of ones we love for the odd block. All of that love, all of it, all the activity was in the March expiration month. We saw 5,000 of the, over 5,000 of the March 25s going up. This is another one right after the opening bell. In the first 30 minutes, the bulk of these went up.
There must be some sort of healthcare, some sort of healthcare kind of a report that came out making people want to buy this junk.
Maybe they manufacture some obscure device that got approval or something today. I don't know.
Yeah.
We saw, like I said, this is another one where the news wasn't apparent readily. This is a strike that had open interest of 800 contracts prior to that, so it did substantially more than that in the first 30 minutes today. The bulk of these are bought, about 4,500 of them were bought for about $1.27. So all bulls for the most part coming in, gobbling up these a little bit upside calls. Stock's got to run about 10% for these to break even. Not surprisingly, the vol on this one's up about 20% today. Yeah, this is another one where no real news driving this that we could see, unless it is some obscure newsletter or some obscure development out in the healthcare sector that's driving this. But when you see a little name like this, or like RDN that does such fairly low volume numbers, all of a sudden spiking, it definitely is worth at least a second look. And this is another one I think we'll keep on the Radeon radar to see exactly what the heck is going on out here, and these guys who are scooping these calls, if they see something that we don't in this stock. I'm expecting you guys don't, not very active in CFN, I'm assuming.
I am not.
Yeah, no, definitely
Mike,
not.
This isn't a long-term stock in the KYO recommended portfolio?
Not at this point. Nothing against it, but no, it's not on the top of the list.
It's not in the KYO jelly?
Maybe someday.
All right, and with that little one, we're going to close out the old odd block and roll right into the express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express/Spread Block. This is the section of the show where we discuss some of the interesting events and inquiries they're receiving over at Options Express. So, Tim, what's going on today at Options Express?
Okay. I thought I would, bring up a basic example for some of your listeners here. I'm not, exactly sure of their level, but it's something that I have seen over the last couple of weeks. And I just kind of wanted to talk about it. A very simple example. Today, I had a customer call up. He was long some TBT calls. He offset those. He, realized a nice profit. He was a nice guy. He knew what he was talking about. And then he said, okay, I'm ready to, sell a Google, 600 put, and then I'm going to go buy the 590 put. And I said, okay, and he was kind of reading off prices, and I can kind of hear him unsure. So I said, do you know what your risk is on this trade? And then it was silent. And I said, well, okay. And I said, you want to go through it? And he said, yes, I do. And I said, okay, you're selling this, December 600 put. You're bullish there, aren't you? He said, yes, I am. I said, okay, and for protection, you're buying at 590, right? He said, yes. I said, well, okay, Google goes to 550. What's going to happen? And again, he kind of struggled there. And I said, well, here's exactly what's going to happen. Somebody is going to be delivering their Google stock to you at 600. And then you're going to go deliver it to somebody else at 590. And there you're going to lose your $1,000 for every one contract that you put on. He didn't make the trade. So, I've been seeing a lot of this, and I think it's, because maybe, we're sort of have some light volume here. We have some of these high flyers like Netflix, Google, Apple. I think today there were a couple analysts who came out bullish on Google and Apple. So you have people who are willing to try new things, but don't necessarily know what the risk is. So I just kind of wanted to go over that example. Because, again, it seems to be a popular thing, over the last few weeks, more than I've seen, before or all year, I might say, and people don't necessarily know what their risk is.
I'd imagine that's a fairly common scenario, especially for people who are maybe calling up and wanting the additional help of the broker-assisted trading, that they're not as familiar with what they're about to undertake as that example shows.
Yeah.
Yeah, well, like I said, one of my favorite things to tell people is, would you enter this trade with the amount of knowledge? Would you let me enter this trade for you with the amount of knowledge you currently have? And if the answer is no, then I say, well, then don't trade and do some research. And that usually makes a pretty big difference, and I think helps. So.
Yeah, that's a real nice way to approach that. I think a lot of times you do kind of have to step outside the box to, come at another approach or something else, some other way to help these people understand that, there is risk to these positions. And if you don't know what that risk is, you may want to do some more research, find out what is the risk. Can you afford the risk? Can you sleep at night with that risk? I always start there, with the sleep at night. Okay. People will say, well, where do I put my stop? And I'll say, well, can you sleep at night if you lose $200? Yeah, no problem. How about 200,000? No. Okay, so it's somewhere between 200 and 200,000. That's your risk. Should we keep playing? And then they get an idea about how much risk they want to put on any trade.
Right.
That's Mark did say that yes. I mean that's
great advice, Tim.
A very common phone call that we do get here, and what we do a lot of, what the brokers here do a lot of, and not just placing trades, but actually going through these examples.
Tim, you could say that 1,000 times, and every time you said it, you'd catch somebody. If you probably catch somebody listening that says, "Oh, yeah, that's right." So I don't think you could repeat that enough. Good work.
Thank you.
Well done, sir. And with that, we will close out the Express/Spread block and roll right into the Strategy block.
The Strategy block.
And welcome to the Strategy block. This is the segment of the show where we discuss some interesting or particularly relevant or just downright juicy options, strategy, or trading tip. Today we're going to be joined by good old Uncle Mike. He's back from his weekend excursions in the mountains, and he's settled down around the campfire, and he's going to teach us one of his latest options tricks. So, Mike, what do you have on the docket for us today?
Well, first off, just so for everybody listening, we are calling from, we do broadcast from Illinois, so a mountain to us is probably about 10 feet tall. So
I meant the hill in your backyard. Did I not clarify that?
Oh, a hill. Oh, no, a hill. That's something that's what, about maybe a 1 foot elevation for our state. Does that sound about right? So, but today what I want to talk about are this kind of a compare and contrast type of thing with the levered and inverse ETFs versus futures and options themselves. With that being said, I think that what a lot of people don't realize about the levered and inverse ETFs is how they work. And I don't have a problem trading them, and we've actually traded them. We've actually used them with some of our strategies in the past. We're not using them right now. We've kind of evolved to the futures and the options, but we wouldn't be against using them if the situation comes up again. But what I think is very important about the levered ETFs is how they're reset. Oftentimes, just to kind of expand upon what Tim was saying, you need to understand your risk. And oftentimes with a levered ETF where you'll see it's 3 times the S&P 500, 3 times the Dow, or 2 times the Dow, or whatever the case may be, the way with which they're set up is that they're reset every day. So between the open of the market and the close of the market, if the market goes up 1%, then this ETF will go up 2%, let's say. And then the next day, everything is reset all over again for your ETF. So that way, let's say that the market goes down 1%, your ETF will then go down 2%. So when looking at that over a period of more than one day, it's not going to match up to being the exact same thing. So let's say that you hold one of these levered ETFs for 25 days, and you're thinking, oh, over the course of that 25-day period, the ETF actually, or the market actually went up 10%. How come I'm not up 20%? The reason being is because of how they're reset on a daily basis in a lot of cases. And all the levered and inverse ETFs work different, but I think what's important is that you know and understand how it actually works when you're using it. With that in mind, let's say that instead of a levered ETF, you decide to use a futures contract. And if you want leverage, well, folks, you'll get your wish by using a futures contract. So, for example, the S&P E-mini. If you were to just go long one S&P E-mini contract at $50 a point, theoretically, if the S&P were to go to zero, you'd be out $60,000. And the margin requirement for such a contract, just depending on what it is for your broker or with the exchange requirement, it's going to be $5,000 to $7,000 approximately on that. So in terms of the leverage that's available, you have that ability on the future side of the market, and the same would hold true for bonds, for pretty much anything that you can imagine on the future side of it. So with that, typically the reason at Know Your Options that we would use levered or inverse ETF, oftentimes it would be for a hedge, but we wouldn't have anything against using them for a speculative purpose. But with our situation, our setup, typically we're using them as some type of a hedge, would be if we needed something a little bit more exact in terms of, let's say that we're trading a $90,000 portfolio and we wanted to do an exact 1-to-1 hedge, let's say. Well, then we would consider maybe doing one E-mini along with a certain amount of levered ETFs to where it would actually match it. Now, we've actually never traded anything above 2-to-1 levered ETFs, but usually it's just kind of as a complement to something with which we do. Our general preference is to go along the futures or the option route. But once again, I don't want to say anything bad about the levered or the inverse ETFs because there's a lot of good things with which there's a lot of good purpose with which they can be used. The message that I want to convey to today is really have a firm understanding of what you're getting into when trading a levered or an inverse ETF.
I think we saw that earlier. Was it earlier this year or late last year when all the brokers went around and revised their margin and leverage rules for options on these levered ETFs? That was a good example of how much risk there is when you're trading these things. When was that, Tim?
I think that was about a year ago. I think you're right.
Because we saw a lot of people using options on these levered ETFs as a way to do an end run around the margin requirements, and it was just an explosion of risk across the board.
Yeah, and I'm real glad that Mike went through that example because most people that I talk to when they or I should say back then, they had no idea that that's how the performance was calculated on those, and they were always very shocked and surprised and unhappy. So,
do you still see a lot of options interest in the levered ETFs, or has the margin change really reduced that a lot for you guys, Tim?
It has reduced. I think I just don't see too much of levered ETFs. There are a couple people that do trade them. They know exactly what they're using them for and how they work, and they don't stay in them for a very long time. So, I feel very comfortable with those customers. But then there's some that, they just think that they can capture that performance of 2 times or 3 times, but they don't realize that it gets reset every day.
It's kind of like a poor man's option in a lot of ways. If you're scared to get into options, that's how we've seen a lot of people using them. For whatever reason, are intimidated by getting into actual derivatives, so they get into these kind of faux derivatives in these levered ETFs, and the end of the story is usually somewhat tragic.
Well, yeah, and you're buying an option, you actually have double decay, where the levered is kind of decaying. The levered is decaying the underlying, and the theta is decaying the option, and you're getting some real problems there. So it's definitely a dangerous game.
A good topic for our strategy block, Uncle Mike. Well done. Now you can retreat back to the molehill in your backyard until we need you yet again for yet another strategy block.
To the mountains I shall go.
All right. That should just be a regular sound clip for us on the show from now on.
I agree.
That'll just be the intro to your segment. How about that? All right. And with that rousing send-off, we will close out the strategy block and move right into Around the Block.
Around the Block.
And welcome to Around the Block. This is the segment of the show where we discuss what's on our horizon, what's on our radar for the next few sessions, and maybe even a little bit beyond. Earnings season is still pretty much behind us, but there are a few interesting names still coming up on the radar. We have RIM coming up on the 16th after the close, and they were, anyone who's been watching them a lot, I had some guys on the floor in my group where we used to trade RIM, and it was just a high flyer for a long time, and has come on some harder times lately. They have earnings coming out on the 16th, and interesting one to watch because they are a good indicator for the enterprise side of the smartphone market, and slowly getting their clocks cleaned and their market share stolen by Android and Apple. But an interesting one to watch. We'll see what happens. Maybe CES will be a big venue for them as well, where they could maybe put out some new product. I think it was last year at CES, or maybe the year before, where Palm kind of took off to the races after CES because they announced a pre, and for a while there was a lot of love on Palm, and the stock took off to the races. So maybe we'll see something similar for RIM.
Yeah, if they could ever get a tablet to work with that BlackBerry technology, they would be in. They would be. If they could get can you imagine if you took something that had the functionality of the iPad with the kind of email functionality of BlackBerry and that BlackBerry Messenger technology? I think that would just wipe the floor. If you got
They did announce something like that a month ago. They call it the Playbook. It's kind
I'll be interested to see.
Yeah, they haven't really let anyone touch it or go hands on with it yet, so that's never a good sign. But they do ostensibly have a tablet in the works that is supposed to be geared right after the hardcore BlackBerry guys, like you said, the guys who use that BlackBerry Messenger. So
the Crackberry. That
might not play into so much into these recent earnings, the earnings coming up next week, but maybe for a few weeks from now into January, they might become more.
Yeah, nobody really cares about. I think right now with BlackBerry, it's less about earnings and more about outlook, because there's a lot of people out there that are wondering whether BlackBerry is going to become, whether it's going to be the next Motorola, where Motorola and the Razr is to BlackBerry, and their, I don't know, the BlackBerry Pearl. Sure, we'll call it that. So.
RIM's going to do a 7-for-1 stock split and then spin off their BlackBerry division is what they're going to do?
Yes. That's all they have is the BlackBerry division.
Exactly.
No, but you get my point, right?
Yeah, I do.
Yeah.
And other names, I know, Tim, you mentioned Google in your Express block. Actually, they're one to watch on the horizon again because there was an interesting piece in the Journal this weekend, I'm not sure if you caught it, where a lot of businesses were pretty much complaining, and some of these were relatively substantial businesses like WebMD and such, that Google is usurping the rankings that should go to their sites for their own products. So instead of seeing WebMD at the top of a search for a particular health-related term, it'll be Google Health. I think the underlying trend is interesting in that for the first time in a long time, we're starting to see a little bit more skepticism and maybe some negativity aimed at Google, where in the past they're kind of the darling, everyone loved them, no one wanted to touch them, and now all of a sudden there's a lot of questions about how they rank these things. Why, for example, is a Wikipedia search at the top of every result whenever there's a ranking or listing for that, without any rhyme or reason? Why are they using their own products above other ones? And that's, I think, what caught my eye about that article and just what I've heard in general about this lately is that they're starting to make some comparisons between that and the old bundling charge they leveled against Microsoft 10 years ago.
Mm-hmm.
So this might be the first hints and the first circlings of some antitrust against Google. And I wouldn't be surprised to see this develop over the coming year or so into something maybe a little bit more serious with a little bit more teeth. And I'm not sure you guys follow Google, what you think about this. But I thought it was an interesting one to keep on the long-term horizon.
Yeah.
I think it's very interesting. Yeah. I mean, it was a very nice article that you brought up.
I don't think the U.S. is going to go after them while Google's tangling with Baidu in China. So that would be my one thing.
No, it probably wouldn't be the U.S. It might, but it probably will be the EU or something along those lines. They've always shown a marked anti-American bias anyway against any corporations.
No, not the Europeans. The Europeans, they look at they're so great about Americans and American companies. What are you talking about? Especially the French.
Look at the Microsoft thing. That's been over for over 10 years in the States, and they're still fighting the remnants of that in the EU to various degrees about browser bundling and nonsense like that.
I know, it's ridiculous. And the funny thing is the browser battle is over,
Exactly.
Chrome
that's the fun part of it.
Firefox and Internet Explorer. I mean, it's not even Internet Explorer doesn't own 90% of the market anymore.
No, exactly. But they're still fighting old battles. I wouldn't be surprised to see maybe the EU or someone bring out something like this, and maybe they wouldn't use WebMD. Maybe they would use the French equivalent. Google is usurping Les Health instead of our own ranking. So, anyway, an interesting thing to keep on the horizon. What else are you guys watching for around the block?
Well, the thing I'm watching out for is all the data this week, and of course volatility. One, we've got a ton of housing data still coming out this week, a ton of it. And, a couple of weeks ago when we had Bill Luby on, he pointed out that, he's been looking at housing data as almost as important, or if not more important than, employment data. And I think that, so I think that it's really interesting that we've got all this housing data, and I've been noticing that actually we've been moving harder on housing data than we've been moving on employment reports.
Yeah, housing's been a key for a while now. Yeah.
Yeah, and as far as individual names, I've been watching retailers. I've been watching some very interesting paper flow. I'm seeing a lot of bullish paper flow on higher end retailers. I'm seeing more negative paper flow on some of the lower end retailers, and a lot of delta. And this could be totally anecdotal, but a lot of delta neutral trading on some of the mid level stuff. Your Kohl's, even your Targets and your Walmarts. Not a lot of bullish activity, but a ton of bullish activity in your Tiffany's, in your Chico. Well, Chico's isn't high end. In your Nordstrom's. It's real interesting. So the anti-new reality reversion, or what the new reality reversion trade seems to be on.
We talked a lot about Dollar General and on
Yeah.
a few shows. They're still hovering around 31. So I guess you got Strangle on. You still have a few days for it maybe to pay off for you.
Well, I mean, you paid nothing for it.
Yeah,
and,
exactly. It was a flyer.
And the Strangle, let me see here.
I'm going to add to your list of nicknames a new title, which will be the Retail King.
I like that.
You love the retail stuff, which is good. That's an area I don't play in at all.
Me and Abe Froman hang out all the time. He manages the sausage, I manages the retail.
Bueller.
Mike, are you guys active at all in retail these days? Are you watching retail around the block?
We're watching a little bit of everything, but one thing that the interesting thing that we're kind of looking at right now, Apple has earnings coming up the Monday after January expiration, and so we're watching that. I guess it's kind of around the second block, I guess, or whatever you want to call it. But what makes it relevant today is that we hit some new highs in Apple today, intraday. And I know if your name is Mark and you're on this show, it's like a rule that you have to say lots of bad things about Apple.
Damn that Apple. Damn them.
So, but with that being said, I mean, over the long haul, I am a fan of Apple just because of it's a good company. It might not necessarily have the greatest of iPhone reception in the city of Chicago, but international, I think this company has a lot more market to capture. And like anything, we're trading this just basically with collars in a variety of ways along those lines. We don't have anyone per se and just straight Apple. There's a variety of different strategies with which we're using on it. But what was interesting today is the fact that it is making some new highs. It's pulling back a little bit, but it's still been hovering around that 320 mark for about 5 or 6 days right now. So we might be making some adjustments at some point.
What's interesting for you, Mike, because I know you're a bit of a chartist, is, if you watch Apple, regardless of what you think about these levels here and if it's overpriced or underpriced, they've kind of worked themselves into a nice little schedule now where they have an iPad announcement earlier in the year, probably around February, maybe March, and it releases in April. They do an iPhone in June or July. They do iPods and Macs towards the end of the year, September around there. So if you get into that schedule, you can usually count on a decent little move around those events. So you can just trade Apple just off those specific announcements that they make, regardless of levels, and kind of come in and whether you want to trade strangles, you want to trade verticals, whatever you want to do on them, even getting away from the oversold, undersold argument, which we could probably go on for a long time with. And obviously iPad 2 probably coming out sometime in, the rumor now is announced in February, if not January, around CES. I mean, Apple always likes to do something to steal the thunder of CES, so maybe they'll announce it there. So that should give the stock a bit of a bump as well. So there's a lot I think you can look at that will give Apple a good shot in the arm.
Yeah, I'll be interested. Yeah, I'll be very interested to kind of see what goes on with Apple. It's been, if you look at it, it really hasn't been doing much over the last, for Apple, it has been very range-bound over the last 2 months. I would say.
Yeah, kind of the 300 to 320 range.
Yeah. So if you sold a 310 straddle in either in October, November, or December, the December cycle, you're probably pretty happy.
If you're selling a straddle on Apple, you're a bolder man than me.
I heard something interesting the other day, just for a couple quick notes if you are on the downside of the Apple tip. One is that Samsung just released that Galaxy tablet, I think last month. And in the first month, they sold 1 million units, which is equivalent to what the iPad did in its first month. I'm pretty sure that's sold to consumers, not just sold through to retailers. But either way, it was substantially more than anyone thought. And it showed that, despite Jobs' dismissal of a 7-inch tablet, there is a serious demand for competitors to the iPad.
Oh, absolutely.
The Google boys were saying that they're activating something like 330,000 Android handsets a day now. So it's up 100,000 from a couple months ago. So there are some serious competitors on the horizon to their dominance. And maybe they won't eat into that core Apple-loving group, but to the broad audience who's been adopting iPhones like mad and iPads, there might be some competitors for their dollars coming up pretty soon.
Yep, I agree. Couldn't agree more.
All right, guys, I think that'll do it for this episode. I want to thank all you guys for showing up. Mr. T, what do you have going on over there at Know Your Options?
This week in our weekly webinar series, Monday night, Monday night, the 20th, we are going to be doing a webinar on hedging a stock to go through kind of like another title for it that we often call it is going beyond the collar, and ways with which when it makes sense to hedge a stock and when it makes sense to just say, you know what, I'm just going to put in a stop loss and let the market do with it as it may. So we're going to be going through the pros and cons of each of it in this webinar coming up on Monday night.
I did surf over the other day to the ISE webpage, and your webinar, sure enough, is still up there, so our listeners can just surf on over to the ISE or maybe even fxoptions.com, which is their FX options portal, and they should be able to find links to that webinar you did about using FX options. And then, Mr. Sebastian, what do you have going on over at Option 50s? I know you still have that coupon code. Let's mention it to our listeners again.
Oh, yeah. I've got a couple things going on. Tomorrow night at 3:30 Central Time, 4:30 Eastern, 1:30 Pacific, I am giving a presentation on trade selection for Stock Futures and Options magazine. It is in regard to the dual feature articles I wrote for them in the October and December issues on trade selection. That's going to be tomorrow, December 13th? Oh, yeah, tomorrow, December 14th at 3:30. Then I have I'm going to be giving starting in January, a special class. It's kind of the connector between all the free stuff and all the really expensive mentoring stuff. It's my Level 2 prep course. And if you are an Option Insider Radio listener, there is a special coupon code you can use to receive $100 off. That coupon code is OI 2011.
Your recall is amazing and astounding,
yeah,
Mark Sebastian.
And let's not forget that, the show here is free, and it's supported by our great sponsors. Not me, but I'm here free.
You didn't get your bill in the mail last week? That's an oversight on our part.
Sorry. Darn.
Nobody talks to me for free. What are you talking about? And, of course, our friends over at Options Express, they're pretty easy to find. Just go to optionsexpress.com. Tim, is there anything particularly compelling you want to let our listeners know about going on at Options Express these days? Maybe your home cell phone number so they can get you at all hours of the day?
Yeah, that's okay. No. I'm just taking a look here at some of our webinars that we have on over the next couple days, and they seem very interesting here. We've got Intro to Puts. That's on the 14th at 9 Eastern. 2 p.m. On the 15th, we have Learn About Volatility Through Options Skew. So a little bit more advanced there. I would just head over to Options Express and take a look at some of the event recordings and live events that we have.
All right, I want to thank everybody for downloading and streaming and listening and subscribing to the show, and we'll see you next time on the Option Block.
To the mountains I shall go.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated, all rights reserved.